colour. You see it in the buy is the blue. So we can see that Max came in for a buy trade just into the bottom edge here after we got this reversion. Remember, it's the transition at the end of these candles. So the buy trade comes in somewhere about here, and we take the market beautifully bid away from that price. It doesn't look like much. That trade's worth $400 per contract. $400 per contract. The sell, well, the sell never pays out. The sell actually ends up making a very small profit and a stop out, and you may well have actually got stopped out for a loss on that trade. Fair enough. Fair enough, I'm not going to argue about it, but there's the next sell trade there. The sell trade does okay. We go 23s down to a low price of 0, so another $200. The buy trade comes back in, and it would have got stopped out on this first attempt at the buy trade on the transition, assuming you're running a relatively tight stop. You know, the buy trade would have been at 89.04s. The low price was 88.95. So you're obviously looking at about a 10 tick stop out if you held on for that. If you just used the previous swing low, you lost about 5 ticks on the trade. But you can see what happened to the buy trade. It did come back in again just in here, and you were able to take the full advantage of what was a very, very, very good $600 upside trade. So you lost $50 perhaps, but you made $600 on the next play, which was obviously golden. It was absolutely spot on, and you can see the price trading back into this max buy area. No triggers, but you can see that it was a solid max buy area. Very easy to look at that as an aggregation candle as well in the background here at 5 o'clock. And a very, very nice upside until we got this max sell on oil up at the top edge. And obviously the max sell on oil, that gave us a reasonable profit, 90s down to 60s for $300. And then the big max sell obviously came in and just absolutely annihilated the market. Look at that, guys. Max on forum or what? Max on forum. That was an annihilation. That wasn't even in the script, was it? That was beautiful. So it's something we've been playing about with for a long time, but we've been absolutely destroyed by technical problems and then staff problems with a stupid bloody COVID malarkey kicking off and all sorts. So you know, Ninja Trader problems have been quite high in the list of problems we've had trying to get this to be able to be rolled out. But you get the basic idea. Max sell side oil. Well, let's put it into context about how good that sell was against the buy trade we had on bonds. Interesting to note that the bond came in first. So here's the max buy trade in bonds. Look at that, guys. Woohoo! Is that not a little bit special? One trade in bonds, one trade in oil. The buy on bonds, 155.20s. The high price eventually 157.07s. Obviously, we closed out early at $1,000, but still, what a bloody trade that was. And obviously that trade preceded the oil, so you already had that idea that bond buyers were in. Well, if you're going to buy bonds when you're going to be selling oil, that's a normal for us, right? So you're going to buy bonds when you would expect to be selling oil. So when you get the sell oil trigger coming in, you're starting to get that feeling that this is absolutely no-brainer sell, right? So the oil starts to show up and you go, there's the deal. There is the deal. This wasn't a particularly big surprise. All the oil guys knew about this trade. In fact, all the oil guys knew exactly what was going on in terms of this top edge. I mean, if you didn't know what was going on in terms of this top edge, then something was wrong. But let's take a look at the bond relationship to this oil trade. Do you see the sell on bonds? Well, it's not the sell on bonds, it's the sell on yield, isn't it? It's that buy on bonds. So it took place on this orange line inverted. There it is there. That's the buy on bonds that we had, right? That's the buy on bonds. So this sell on oil was already illuminated by this huge buy that we've already had on bonds, and actually gave you a chance to even do, if you wanted to trade it as an inflation hedge. You could have taken it as an inflation hedge trade, right? And then we get the top edge oil sells coming in, and then we get that big sell-off behind that long on bonds, which was absolute perfection. Absolute perfection. As a bond trader, of course, we know and we can explain why we got the trade on bonds, why we got the big buy on bonds. It's a very, very straightforward narrative. For all you guys that trade bonds, obviously, in the background of the back offices and the dark rooms, since bond traders a lot of the time don't like the light, So why were we big buyers of bonds? Why was this a big buy on treasuries this morning? What made this sensational? Well, it's all about the narrative behind the curve, the relationship of the curve. We can look at the 2s10s in isolation, of course, but that's never going to be enough, but it's very good. It's a great starting point. The 2s10s, of course, is the TUT spread. And the idea of trading is that we always try and do regression lines. The idea of trading is we always try and draw regressions. You know, the idea is to try and see value, not just from a, for example, a regression indicator, because that's going to be based upon a period where our eye is far, far better than being able to set a 20-period average on these things or a 50-period average or whatever, because then we just, what's the point of it? We can see with our eye that the regression, for example, from the overnight session coming into this price is down here. We can see that regression line. So based on that regression line at this stage, we can understand that if that's what the regression line looks like, and it is, that's what you would write down for your regression line because we're buying into this bottom edge. The idea is that we want to do the same regression on the TUT spread. We want to try and see what the TUT spread regression looks like. And if we look at the TUT spread over the same period, and I'm just going to draw the same period, and I'm going to draw the regression line, we can all agree that the TUT spread regression line looks like that as well, doesn't it? Yes? Can we all agree that that regression is about correct for where you would draw your regression line into? Well, if we can all agree that that's what the regression line looks like, we can all agree that the regression line would suggest that bond prices, glad to see that the yes box is just as active as usual, we can always then understand that bond prices should be in that direction right there. Bond prices should be in that direction there. So when I go back to bonds, my idea of bonds should be that they should be trading up in this direction here. So when we look at bonds, we should be trading up into this bracket high, shouldn't we? 156.08s. I'm being offered 155.20s, guys. I'm being offered 155.20s for a buy opportunity. What the hell is that all about? Well, what that is about, guys, is an incredible opportunity to buy up massive amounts of bonds. Massive amounts. Massive amounts of bonds. As many as they can give us. As many as we can carry. And Nessie can carry a lot. She's got a wheelbarrow for these bonds. So, we're ready to get into a long bond position, right? Now, obviously, one of the things that we look at is the idea of parallel shifts. One of the challenges now is that sometimes we get a parallel shift and it can give us a bit of a wrong read, but that's not usual in the TUT spread. That's usual in the knob spread. Parallel shifts is usually when the knob spread's agreeing with the TUT. It's not usually when the TUT's agreeing, as a knob spread narrative. So really, the TUT spread is almost unbreakable in this type of environment. But let's take a look at it anyway. Let's take a look at whether we had the parallel elements that was giving us a long bond narrative. So this line combines the knob spread and the TUT spread to give us an interest rate storyline built up of the curve itself, the 2s10s and the 10s30s. So it gives us the interest rate curve. And you can see quite clearly that the amount of value that I have against that interest rate curve is not big. It's bloody enormous. And the buy into this is humongous. What an opportunity. Into the top edge, a little bit of divergence for the sells. And you can see that divergence for the sells in there, and a small amount of divergence for the sells again. And you can see that again on this spike higher, do you see that there is still a small amount of divergence on this? I mean it's one tick higher. Literally one tick higher on those spikes. So obviously when we zoom into that chart, it might be one tick higher, but that rally in bond prices is somewhere like 8 ticks, 7, 8 ticks higher. So that's giving you a little bit of an edge in here, isn't it? If you wanted to wait because you weren't sure, you could have possibly have sold in here. That would have made some sense. And obviously the sell takeaway from that has been reasonably good. It's been reasonably good takeaway from that short top edge up here. So it's been good, it's been great, it's been fabulous, it's been fantastic, it's been everything we've ever wanted in bonds and a little bit more. It's been a good day, guys. It's been a very good day.